Happy Wednesday before Thanksgiving. And I don't know if you guys have heard about the new 50-year mortgage that's being thrown around. And so I was like, is this a good idea or not a good idea? So I brought Elizabeth to talk about it, Elizabeth from Guild Mortgage, to talk about the 50-year mortgage.
Okay, well, thank you, Angela, for having me. I appreciate it. So let's talk about the 50-year mortgage. So what do you think? What's your gut say?
It doesn't seem like a great idea to me because, my goodness, you would be paying, like for somebody my age, in my mid-50s, I'd be paying off the mortgage. I sometimes I feel like I'm 35, sometimes I don't. It depends on the day. But for somebody like me, it just does not make any sense, right? To take out a 50-year mortgage, I would be 105 when I paid it off.
Which could happen.
I mean, that's not the goal.
Gotcha. Okay. All right. So there's some pros and cons. So I do see it as a great way to enter into the market. So right now, I think we discovered that the first-time home buyer now, the average age is 40 years old. So that's kind of interesting because that actually puts a kind of a slant on things that where first-time home buyers typically we're between 20 and 30 years old. Now they're much older. So the entry into the market, it might open up more entry into the market for younger people if payments are a little bit less. So that could be a really good thing potentially just to kind of get them in the door. These are fixed rate loans. Now we have had 40-year fixed loans not that long ago. In 2006, 2007, we did have the 40-year fixed loan. We even had a 40-year interest only loan, which is pretty,
with no principal.
With no principal at all.
Gosh.
Yes.
Okay.
So
that seems like a trap.
I don't know. Compared to some of the loans that were available at that time, maybe not so bad. So it just depends. So I think that maybe it could be a nice way to enter into the market. Now someone's definitely gonna have to pay more because it's locked for 50 years.
Right.
And investors you're gonna pay a higher premium for that rate because most investors don't want to invest in 50-year mortgages versus a 30 or a 15.
So you're gonna be limited in which lenders would be willing to get into this, correct?
Yes. There's another part of this too, is that there is new rules in place since the NMLS, which is the National Mortgage Licensing, anyway, not that you care. But since that was created, there was something called the Frank-Dodd Act. When the Frank-Dodd Act was created, they say, some of the rules, they call them qualified mortgages. Now, this falls outside the qualified mortgage parameter, meaning that anything that is more than 30-year fixed is now no longer a qualified mortgage. So it doesn't fall under Fannie Mae or Freddie Mac.
Okay.
So this would mean that those institutions, the secondary market, would have to approve this and change the Dodd-Frank Act in order for this loan to even be possible in the open market. Okay.
Oh, so it literally take an act of Congress to get it to
not
work.
Not Congress, but the NMLS, somewhat. There is some registry issues with this program, so that has to happen in addition to all of this.
So this isn't an official thing that's happened. It's just something that's being thrown around.
It's a conversation that's being had in order to make housing accessible for other people.
Okay.
So it could be okay. Now the other side of the coin is, hey, if you can get a lower payment just to get into the house, great, and you can refinance later because the national average of refinancing and people changing the loan is every 5, 7, and 10 years. So we have loans out there that are fixed for 5, 7, and 10. And the reason is actually very logical, is that people change their loans that often. We have life changes, we have babies, we get married,
we move,
we get changed for jobs, we do all these different things. So that's why they have these loans available for those folks. And so this 50-year mortgage could be okay because it's fixed for the whole period, so you can live on that loan for as long as you want. And even if you were to stay there for say 10 years, 15 years, maybe it's okay.
Yeah.
So I don't know. Definitely a mixed bag between the two situations.
So you have to, if you're going to do something like that, if you're going to do a 50-year loan, you really have to be strategic in your planning.
Yeah. I would not pay the minimum payment if I was doing a 50-year loan because you're going to pay approximately 45% more for that same house than you would even on a 30-year fixed. If you've ever looked to see how much money you pay for a house overall for your, let's just say, $400,000 house, you're going to pay on 30 years probably about $600,000 or $700,000. So that's the cost of doing business with a bank. So
and on a
50-year, going to be even more. It's
gonna be-
30% more.
Yeah. So,
Mm-hmm.
you know, if you're thinking about paying off your loan early, or you're thinking of restructuring, or not restructuring, but refinancing, or you're not planning to be there, it's not your forever home, probably
Could be okay.
could be okay.
Mm-hmm. But your balance is going to take longer for it to adjust. So even if you're, you know, planning on getting appreciation of 3 to 5%, which is the national average, it may take you longer because you're going to have this higher balance for a lot longer.
Okay, so you're not going to be building as much equity as you would be with a standard loan.
It's minimal though. It's not really that
not
huge.
that big of a deal.
No, not to me anyway, but it might be to another person. What other reasons like would you do this? I mean, just the cost of it, I think, is going to be considerable.
You mean over time?
Over
with
time, over 50
the length
years.
of the payment? Yeah.
But no one keeps a loan for 50 years. I have yet to see a borrower have a 30-year fix, the same loan that they purchased with, and have it through the entire term and close and finish that loan in 30 years. I have yet to see that.
Yeah.
And I've been doing this for 27-ish years. So
I know I bought my house in 2012.
Okay.
And we've refinanced twice since then.
Yeah, exactly, because you're always trying to better your terms. So you probably have like a 0.5% on your loan.
It's a very good loan.
Yeah. I have one of those too. We bought our house right towards the end of COVID, so 4%. But trust me, these 50-year fixed mortgages are going to be at least 0.25% to 0.5% more than a 30-year fixed.
So the current 30-year fixed is what, 6.5?
Right now you're looking at about 6 1/4.
6 1/4, so
ish.
So almost 7%.
I would say 6 3/4.
6
maybe.
3/4.
It's not going to be. It's a new product, so it depends on how really they want to push it out and make it possible. So it's hard to tell.
Okay. And so you were talking about, you know, what happened in 2007 with the 40-year mortgages and how that was sort of destabilizing.
I don't think I actually thought the 40-year fixed mortgages were fine. What I felt was the problem was the 2 and the 3-year interest-only programs to 100% financing. I felt like those were a problem. And it wasn't even that those were really problems. In my opinion, they opened up this funnel, they allowed all these loans, and then when the market was shifting, they shut them all down. So that people didn't have a chance to go back and refinance into a 30-year fixed with a stated income program. So there was very little time. The shift happened very quickly within a 6-month period. And so then the whole market was then very unstable because you had all these people that couldn't refinance their homes that qualified on a stated income program, and the stated income programs are suddenly gone like that. So I would say probably more than 65% of the homes out there, there's no way those people can qualify, and that's why they all went to foreclosure, short sale, or those types of things.
Okay, so you don't think that's going to be an issue?
I don't think
this time around.
No, because it's a fixed rate loan.
Okay.
And it's qualified. You have to qualify with it. There's no stated income. This is like you're going to have to provide pay stubs, documentation to get it.
Good credit score.
Yeah. So I think it's only going to be probably available with conventional loans. FHA and VA, I would find it very hard pressed to see them go to a program like this.
Yeah, that makes sense. Okay. All right. Well, any other words of wisdom about this?
Don't wait to buy your house, though.
Okay.
If you can qualify right now, do it, because I don't see prices going down.
No. In fact, they're projected to go up another 4% in 2026. So now is the time.
The problem still remains is that we have more people than homes. So that's the innate problem. And that problem isn't going to change when we have baby boomers that are living longer and the new generation that is one of the largest populations we've had.
Yeah,
so you've got
Gen
these
Z.
two, you have two populations that are coming together at the same time that are really not good. And, so that's where we're at.
Oh, we've got some music, some background music now. So we're going to call it a day. Thank you so much, Elizabeth.
Thank you, Ms. Angela.
And how can people reach you?
You can reach me by phone, and my phone number is 505-415-6315, and thank you so much.
All right, great. Thank you.
Thank
and
you.
It's always fun to hang out with you.
You too.
And if you want to find out a little bit more about the Albuquerque housing market, or if you want to see something, or you want to stay in touch, come see my open houses. Give me a call, 505-377-2055.